Today, folks, has the stock market bottomed? I believe October may have very well been the finalization of any crazy dips we may see. Like, there's a new trend going on, and earnings are really helping bake that in. Even though some of these earnings were not that good, we're going to take a look at Microsoft, Meta, Google, all that fun stuff. Offer some opinions, but first, let's just talk about what the market kind of looks like moving forward from the view of Kevin OLeary. Just take a quick listen.
I think we're going to have a period of softness for maybe 18 months.
18 months?
Yeah, it could be that long, and it probably will be triggered by this, call it a pig in the python of commercial real estate. It's got to go through the pig.
Interesting.
You know, it's a really big $500 billion loss, has to be absorbed. It'll wipe out 15% of the regional banks.
A lot more bank failures.
Oh, yeah, but it's not that bad. It's everybody keeps saying, oh, my goodness, the Bank of Zortmaster is going to go to zero. Who cares? The American economy is so large.
The locals do.
Yes, but it changes your behavior to be a better investor later. You will never put your money into a bank run by an idiot.
Now, if you're somebody that is truly as paranoid as I am about money, you're not going to put all of your money with one bank anyways. I know it's a convenience for most people, but me and my fiance are utilizing 3 different banks. Obviously, in Canada, we don't even have regional banks, and I think the monopolistic behavior of our banking system in Canada protects us from those kind of downfalls because they're so heavily regulated, unlike some of those regional banks that the U.S. has. However, it's not hard to imagine people that have those crazy mortgages coming up for renewal or dealing with the variable rate market on commercial or highly leveraged real estate. I mean, they're going to be feeling pain, and that's what Kevin OLeary thinks is going to continue to drag down aspects of the market, but I don't think that has anything to do with equities, right? I think now is the time to be long equities. It was obviously in October leading up till now, and as I've been trying to take advantage of those major dips, I think those major dip opportunities may have come and gone at this point. I think we could start seeing a flattening or a slow trickle to the upside from here. Let's talk about some of these earnings with Google. Let's get into it with, obviously the advertising plays first, see the softening in the market, why people are seeing these as buying opportunities and these stocks are rallying aggressively. We'll talk about some of the indices here, what's going on with the S&P, but look at Google here because it's a little bit off its high still. Like, we got a little ways to go. I mean, it's still down 28%, one of the worst performers. Obviously, the advertising play is getting clobbered here, but when we take a look at the actual growth on this, right, like Google search and other, they saw a bit of an increase here. YouTube ads down slightly. You're looking at Google network, Google advertising, pretty much nominally flat here, but what's really cool, cloud, obviously this is the same thing with Microsoft. Cloud computing still driving a lot of growth in this market, and this is nominal, right? Like, things are kind of just slowly tampering off. If we go and take a look at the diluted here, when we're talking about like EPS, obviously this is down year over year, but this is just coming into the expenditures. But again, we want to look at overall revenue, which went from 68 billion to 69 billion, and that's what people should be fixating on here. Is revenue still consistent, even though there's obviously some change in cost year over year? But let's talk about Meta, because Meta's been a huge outlier here. This thing has now rallied wickedly off its lows. It's kind of wild to think that I sold out of this right around March of 2022 for $20 to $20 or $220 a share, and we're pretty much above that now. So if I just held through, I would have been doing pretty good at this point, right? It's crazy to think it's up almost 100% year to date. But take a look. Analyst expectations were so low on Meta that they kind of crushed it. I mean, they thought they were going to do $1.95 for EPS, but if we kind of get into the numbers here, the one and zeros, the revenue, guys, I mean, actually has increased 3%. I mean, they're actually seeing some revenue growth. Their net income, unfortunately, declined by 24%, which you think would lead to people being like, oh my God, their EPS went from a 272 to 220. Like, you think that would lead to a decline in people's expectations. But when we take a look, again, it's mostly just flatlining at this point. We're starting to see, their advertising revenue and everything just kind of, again, come to this nominal rate like we're seeing with Google. Yeah, it's not like wicked new highs, but the fact is the fundamental business is continuing to kind of grow here. Family daily active people continue to go up. It's like this company is not done growing yet. I mean, you take a look at some of the family monthly active people, pretty much all their metrics across the board except for revenue, because obviously in a softening market, people aren't advertising as much, but that doesn't mean people aren't using their platforms as much, right? And just talking about their market cap is now sitting at 616 billion. JP Morgan's is only at 400 billion. What does that mean? Well, basically something that I've talked about pretty frequently here is the constant fluctuation in the top 10 largest companies in the US. It's almost like penny stocks at this point, the way they're trading in and out of the S&P. Because if we go in the S&P 500 here, again, year to date, this thing's now up 7.5%, and it's starting to rebound thanks to some of these big tech earnings kind of proving resilient. How high are we from the low lows here. I mean, we're 14% pretty much from the all-time high, and we're definitely off, those October lows by about 14% there. And taking a look at those top 10 companies, right? Like, it hasn't adjusted yet, but don't worry, next month, Meta is going to be above ExxonMobil. Hell, I think it's above Johnson & Johnson at this point. So it's going to be back up here in the S&P top 10. These companies have been just in and out like unbelievably, but still pretty intriguing, right? So Microsoft here, also crushing it. I mean, these are mega cap companies, guys, and we're talking about like, a 5-6% jump, 10% over the last week in a company like this is a huge amount of capital, right? So Microsoft really coming off the backbone of the AI purchase with like ChatGPT. People think this is going to be a huge AI play. That's really helped pressure Microsoft up because it's literally only down 11% from its highs. And just taking a look at those earnings as well, doing pretty good. Revenue was $52.9 billion, an increase of 7%. Operating income, $22 billion, increase of 10%. Net income was up 9%. So probably one of the better earnings, which is going to be really fun to compare it to Apple once we get Apple earnings coming up. And again, a lot of this coming from cloud as well, because you can see on a percentage basis year over year, cloud was up 22%. So Microsoft's a huge gem here. Again, it's funny to think that product revenue has actually dropped off. But again, when you look at services and other services, is probably what's going to be driving most industry growth right now, especially with Apple, considering we saw like a 50% decline in shipments of the new MacBooks that came out. So I think we're going to see the same thing with Apple. It's all going to be driven from services. Again, we mentioned it time and time again, Apple's getting into the financial sector. I think just every aspect of their cloud, obviously Apple TV, all that stuff will continue to offer some softening against any blow from iPhone or MacBook sales or things like that. So overall, guys, again, I think we're just starting to see what is a bottoming of the market. It's a time for equities, and I don't think we're going to get any major dip without some black swan or kind of sidelined event. So if you're looking to sit on the sidelines, like I'm sitting on a pretty healthy amount of cash. I'm almost back to 10% cash, but I'm gonna probably start picking up some S&P here. I mean, why not? It's just you can't really see things being as negative as I think people want them to be. But I'd love to know what you think in that comment section below.